And we are live. Oh, dear Lord, markets drop almost like a rock because yesterday Powell dropped a bombshell on rate cut hopes. And I mean, right now, the historic 44,000 milestone of the Dow. Yeah, right. Then also news from Warren Buffett. Warren Buffett is on a shopping spree. He finally buys some companies. And then also we have to take a look at AMAT, Applied Materials, and Tesla. So as you can see, we have a lot to talk about. And with that said, let's get started because welcome. No, where do we start? Oh, it doesn't matter. Welcome to Coffee with Markus and Mark. Today is Friday, November 15th. And in this show, we are going to talk to you about what's happening in the markets and how we are trading it. And boy, Mark, look at that.
Look at that, Marcus. A little bit of a post-election fizzle after such a strong week last week where the markets just took off. Not quite giving up all of last week's gains, but about half of where we finished last week. Right now, the S&P looking at about a 2% loss for the week.
Yeah. And I mean, we are getting close to a potential gap fill. I mean, at first it seems that it's up, up, and away. And it seems that right now markets might want to fill the gap. And if they do, it means for the S&P going down to 5,750. And that's where probably it'll meet the 50-day moving average. So not necessarily a bad thing. I mean, it's kind of good for the markets every now and then to touch the 50-day moving average to give it a chance to catch up, because as we go back and zoom out a little bit, we just see that the 50-day moving average, I mean, just this year alone, we went from where were we? Like 4,500 approximately to right now 5,700. So yeah, it's okay. It's always okay if you're not running too far away from the 50-day moving average, because as you can see, when we have a huge gap, that's when we might be dipping below the 50-day moving average.
Yeah, to be honest, these runaway moves where we gap and just take off, they scare me because in my experience, when it starts to run away like that, you're more exposed to bigger pullbacks and some chaos when things turn. And so this pullback here to me, I like it because it could be that the uptrend is still intact. You have that 50-day moving average is still pointing up. We see, like you said, the S&Ps pull back to the moving average and continue to move higher. So this, I know it feels weird to say when the market's down 2% for the week, but this feels good.
It does. It does. So, who is to blame this time? It is Powell. Powell was speaking yesterday in Dallas, yesterday afternoon at 3 o'clock Central Eastern time, 1 hour before the markets close, and he kind of dropped a bombshell after the Fed meeting last week.
Yeah, and we started to turn a little bit before his comments. However, I think that this really just puts into perspective why we're continuing to move lower today. The Fed doesn't need to be in a hurry to reduce interest rates. There you go, right? And that's what investors were hoping, that the Fed would continue on their rate cutting trajectory. And a December cut before his comments, it was a probability of 82.5%, which is pretty high, almost a done deal. But now, not so much the case.
Yeah, let's look at the probabilities and how they have changed. I mean, as you said, just a few days ago, we had an 82% probability of a rate cut of another quarter percentage point. Now, today, I mean, this morning, I mean, we're moving all over the place here. This morning, it was almost 50-50. Right now, it has changed slightly. So it's at 62 38 here. But I mean, this year is subject to change every hour right now. And what we just see is that the possibility that traders are factoring in that the Fed might not cut rates in September is creeping up.
Yeah, when I looked at it earlier, I think it was 58.42. So it's shifted a tiny bit, but Yeah, and look at that. Not only do you have the cut in December, uh, almost a toss up, but the future cuts, this is changing too. Look at the blue where cuts might take place, and more importantly, where a pause is taking place rather than continued cuts.
Right. I mean, right now we are at 4.5 by 475. And according to Fed funds futures traders, look at this. I mean, the probability that by the end of 2025, the Fed might only lower rates by 1.25%, and we will still be in the high threes or lower fours.
Yeah, I think that this has definitely shifted since the election. At first, it seemed like the trajectory of the monetary policy and what the Fed decide wants to implement, it wasn't immediately factored in, but we have talked about higher prices potentially and maybe some inflation concerns. In addition to a growth oriented administration. And now it looks like the probabilities are starting to show that. And here you have the 10-year yield, which also shows it.
Yeah, the 10-year yield just shows how traders are factoring in, okay, higher for longer. After basically in May, June, and July, we were on a downward trajectory. Now we are trading close to 4.5% again in the 10-year yield. I think earlier this week, did we crack it earlier this week? Let's just quickly see. No, just where did we were this morning? Yeah, this morning. Look at this. This morning, we cracked the 4.5% in the 10-year yield, pulling back a little bit, but higher for longer, it seems. And the Fed says, all right, the economy is still running a little bit too hot. Inflation is running a little bit too high. So let's cool down the economy. And this is what we are seeing today, what traders are
Yeah.
concerned about. Well, also looking at the heat map, we see that today the what is it? The Magnificent Seven taking a hit. Nvidia down 2.4%, Microsoft down 2.4%, Apple down, Google down, Meta down, Amazon down. So I mean, this is where we see utilities kind of the flight to safety up a little bit today, but I mean overall technology getting hammered.
Yeah, some green and energy utilities and financial services, but a large part of the heat map down. And like you said, tech leading the way.
Yeah, and it's probably caused by AMAT reporting earnings. And I mean, in terms of earnings, better than expected. Look at this. But it's not only about earnings.
Yep, you have those top and bottom numbers, but then also guidance and some concerns about their revenue guidance overshadowing the beats here.
Yeah. Also, I mean, technology, I mean, especially applied materials here. What do we have? A producer manufacturing here. This is where traders and investors just getting used to estimates being crushed. I mean, just being massively higher. And here, yeah, up 5%, up 1%, like kind of in line. No, I mean, that's what they wanted to see, that it is crushed. So AMAT today down 8.5%. Earlier today, it almost looked like AMAT could recover, but right now, with the market sliding, AMAT being dragged down again.
Looks like it.
And then we have news from Uncle Warren. Uncle Warren decided he's done with Ulta Beauty, and he decided to sell more shares in Ulta Beauty. I don't know if he still has any left. Let's see. If he sold all of it.
It's
No, there we go. Selling
97%.
97%. Here it is. 97% of the shares. So yeah, I mean, he's done with Ulta Beauty, but he's now bullish on. Did you see what he bought?
Yeah, he likes a little pizza.
DPZ, Domino's Pizza. Like, really? I mean, out of all the companies that he could be bullish on, He is bullish on Domino's Pizza? I don't get it.
Hey, just because you don't like the pizza doesn't mean they don't have a good business model.
Well, they seem to have a really good business model, right? I mean, because their share is trading at 444 and 49, and right now up 2%, sliding a little bit today because overall the markets are being dragged down. But this morning, up at 460. It's pretty much a 5 months high that we have seen here this morning after Warren Buffett said, "All right, I like me some Domino's Pizza."
You got his accent perfectly, Marcus.
Yeah, that's exactly what he said before he said, "Go buy." All right, let's see what is going on with our WTF trades. So we still have a few open trades. AMT, American Tower. I mean, hanging in there today. This is where real estate today. I'm a bit surprised by this, but up 0.9%. I'm pretty sure that we'll take it.
Sure.
So let's trade that you're in. I'm not in it.
Yep.
We decided to skip CEG and Johnson today, up 0.5%, dodging the market sell-off.
Yeah, hoping this would have kicked in earlier, but I'll take it.
Sure. And then we had a new signal, the new signal MDT, Medtronic, and we both decided to take this one.
Yeah, and off to a great start today.
Yeah, so you got filled at the open at 85.47. I got filled a little bit better at 85.20. Right now trading at 86.74. So yeah, liking this. I mean, off to a good start here. So with that, I mean, that is kind of right now my only position. For you, it is the third position. So AMT, Johnson & Johnson, and MDT for you. And we'll see how this turns out. Hopping over to the wheel, and yes, with the overall market being down, no surprise that our positions here are also being dragged down. First up, BP, zooming in here a little bit, BP kind of hanging in there. I mean, down almost nothing, kind of flatlining here, down 1 cent, it seems right now for the day.
Yeah, just flat.
Just flat. Halliburton, our other oil and gas play today, was nicely up. I mean, almost stretching 31. It was trading at 30.77 and now pulling back a little bit. But this actually looks good. I'm very happy with what this chart formation shows us. And right now, it's really a matter to smash through this resistance that we have at around 31. So I took the resistance off so that HAL Halliburton knows exactly what to do. Go up there, do it. Looking good. I'm liking it.
You don't want your lines on your chart to act as a barrier for the stock.
You do not. That's very, very important. CSIQ today. I mean, we started really well with CSIQ. Right now, down with interest rates being higher for longer, probably. So right now, trading at 11.41. Nothing for us to do. We did have a good run up, and we see that there's definitely some volatility in CSIQ. So let's show some volatility to the upside after finding some support here and go back up to 17 or even 20. So let's do it, but nothing for us to do there. KSS Coles, very, very interesting this morning at first, doing well. Retail sales coming in higher than expected, yet Coles pulling back a little bit, but this is normal. I mean, a 3% move for Coles is nothing. This is where we are still moving up and down 3% every day. So yesterday, Coles had a great day, up 2.9%. Today, we are down 2.9%. Wow, look at this. Yesterday, up 2.93%. Today, down 2.93%. That's interesting.
Look at that.
Yeah, Coles just jumping all over the place.
Yep.
Merck getting hit here by the news of our new administration appointing Robert F. Kennedy as what was it? Health and Human Services?
Health and Human Services.
Right, Health and Human Services. And this is where we know that Robert Kennedy against vaccines, and therefore today pharma companies taking a hit there. Recovering, but still down 1.9%. But we were trading right now at 96. Today we were trading as low as 94.48. So recovering here a little bit, hoping to shake off the news. Nothing for us to do there. And then we have UPS. UPS green today, up 0.6%. I'll take that.
Absolutely. Headed in the right direction. Let's keep going.
Yeah. All right, so these are the trades that we have going on, and we need to see what is happening in the markets. Are the markets moving lower? Because just when we started the shows, the markets were making session lows. Can they recover? Will the bleeding stop here at some point? And what can we expect for the rest of the day? But before we do this, it is the time in the show for our dad jokes. What do you got for us today?
Well, Marcus, it's a little known fact, but today is your birthday, so happy birthday, Marcus.
Thank you.
And congratulations on that one. And in honor of your birthday, do you know how to avoid getting heartburn after eating a birthday cake?
Nope.
You take the candles off first. But another one here. What do you always get on your birthday? A year older.
Oh.
And to wrap it up, just keep in mind that age is merely the number of years the world has been enjoying you, Marcus. So have a happy birthday.
Thank you so much. Really appreciate it. Well, I don't have much for you. I mean, after this, I'll have to ask you, what do you call a laughing motorcycle?
That I don't know.
Yamaha.
Yamaha. Ha ha.
Okay.
Ha ha ha.
All right, give all the votes to Marks. His jokes were definitely better. Okay, with that said, let's see. So we are still trading at session lows here in the S&P. Look at this. Seems although we might find some support here in the Dow, we are already bouncing back a little bit. In the Nasdaq, still trading at session lows. The IWM also bouncing back a little bit. And the VIX almost up 10% today. And this is because some fear and uncertainty is back after we thought, well, we know exactly what the Fed is doing. It's like, no, wait, what did he just say yesterday? So this were some more uncertainty. One thing is for sure, we are heading for a losing week in all of the indices. So right now, as you mentioned earlier, in the S&P, we are down 1.8% for the week. In the Dow, down 1% for the week. The Nasdaq, 2.8% down for the week. And the Russell being hit the hardest, being down 3.5% for the week.
Yeah, looks like a bit of a pullback, and we'll just see where we kick off next week. Looking forward to another great week of trading and a great weekend. So, Marcus, enjoy your birthday and your birthday weekend.
Absolutely. So next week, yeah, can the markets bounce back? We will talk about this. So you want to make sure that you subscribe to the channel, hit the little notification bell so that you get notified. If you enjoyed today's show, give us a like. If you feel that this was information worth sharing, we really appreciate when you're sharing the show. There's a share button somewhere right here. And yes, I'm going to celebrate my birthday right now. Have a great rest of your day and a great weekend. And we'll see you on Monday.
Happy trading, everybody.